think all systems are go. Happy New Year! Happy New Year, everyone. I'm super excited. Happy New Year. Happy 2022. I pray that you brought it in safely. Safely and with enthusiasm, or with more low key. Like I did. I think I was more low key. I feel like most people probably brought in a new year a little bit more low key, due to what's going on with COVID and numbers rising and all that good stuff. So I hope that it was safe, it was wonderful, and you were with people that love you and that you care about. All that to say, welcome, 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 welcome. It is me, Danielle J. Metro, your upcoming queen of real estate, and I'm here for today's and this week's 2022 first episode of Tuesday Tip at 2. I took a bit of a hiatus last week, just a small one. I was going to do something new, then I was like, kids were on break, on their winter break, and I was like, you know what, I'm gonna just take this much needed time and just put up a replay. I hope you enjoyed it. It was my number one most viewed video in 2021, which was about the Bank of America program, I believe it was. Listen, if you want to catch that replay, please do so. And yeah, we'll see what 2022 brings as far as most views. Thank you to those who are newcomers who have subscribed. I hope you enjoy the content, and continue to watch, continue to share. Let's talk about that right now. Like, share, comment, subscribe, all that good stuff. I appreciate it. So yeah, let's dive into it. What are we talking about? We're talking about the real estate forecast for 2022. Real estate forecast, housing market forecast for 2022. I am a PA licensed realtor and I service the Philadelphia and surrounding suburbs. So a lot of what I'm going to talk about has to do with nationally, but I will talk a little bit about what's going on in this area more specifically as well. Okay, so let's get into it. What's going to happen this year with the housing market? I will definitely say, according to what I'm seeing, as far as selling houses in the Philadelphia and surrounding suburbs, as far as what I'm hearing from colleagues, as well as me doing using Google and watching podcasts and Yahoo Finance and CNN and all the other articles and videos that are out there, I can definitely agree with the fact that what I hear from lenders is that the interest rates are going to go up, right? So, one of the things that happened in 2021 was the record low. What was happening in 2020 and 2021 were record low rates, right? So, pretty much balancing out a potential housing market crash with the COVID happening and all that other stuff, and having a pandemic and stuff like that, it caused interest rates to drop down and reach some historic lows, the lowest in history, let alone in recent history. We're talking about in history in general. So that is fantastic. But this year, they are projected to go up, especially in about the second quarter. They are projected to go up. They have already started to climb up. So at one point, you could get a 1 point something, a 2 point something for a 30-year mortgage. Now it's more of a 3 point something, right? And which is still fantastic. Before the pandemic, we were at almost 4% or at 4%, in and around there, which is still not horrible. But it doesn't look, at least from my reading and findings, that it will get too much above 4% or at 4%. So we're still staying below that 4%, but 3.5% is definitely a lot different than 1.15 or 1.9%. How does interest rate affect housing market? It definitely affects it by way of the affordability of house, right? So when your interest rate starts going down, start going up, what was happening before my interest rate reached a historic low is that a lot of people who couldn't afford certain price points were now able to afford certain price points. So we had that aggressive, 25 offers, 35 offers, 50 offers, 100 offers. You were hearing just crazy numbers for how many offers were being put in on certain homes in certain areas, right? Which again, because when interest rates are lower, that opens up how much you're able to borrow, your borrow ability. Did I make that word up? Maybe. So it opens it up. Your debt to income ratio, all that good stuff. When interest rates are lower, you could squeeze out maybe a couple more $100. And again, can get you more house, right? On certain areas and all that good stuff. So with lower rates, not being as low, that is something that is projected to happen. Another thing that's projected to happen is that it's not going to be as crazy as it once was, where you're putting in 35%. I'm sorry, 35 offers, all that good stuff. At some point, you were getting offers as high as 30% above asking price. Okay. So maybe we won't get to that to 20 and 30%, but we might get to 10 to 15. I was talking to a few people and they were like, well, what's the housing market doing? Is it still people fighting over offers? And I said, well, at one point, maybe you had to decipher 20 offers on a house that's good looking and all that good stuff. And maybe now it's just like 5 or 7. So I guess that's better. All that to say is that it is still competitive. It is still competitive as mortgage rates remain low. It's still competitive. People are doing a lot to save their money, right? We had those stimulus checks happen for some people that did not lose their jobs. They don't have to do a daycare and all that good stuff. Maybe they're starting it now, but there was a time where they didn't. So a lot of people are saving their money or considering moving and all that good stuff. And so that's what's happening as far as the competitiveness with buyers. Another thing that's going to be happening is our inventory is still going to remain low. We have had low inventory for some time now, especially in this Philadelphia and surrounding suburbs. It has been low even before the pandemic. It's still projected to be low, even though new construction is starting to come back around more as far as locally. It is still nonetheless not going at the pace and rate of their our buyers. Okay, so all that to say is just understand that you're going to get a lot of it's going to be a seller's market for a while. It's not projected to not be a seller's market, at least in this local area or really across the nation. Another thing that is helping people to want to buy now is that the government has been holding off student loans. And that is definitely causing people to be like, hey, let me go ahead and buy now before these student loans kick in. So that is definitely helping people to be able to buy a house and buy now. Okay. What are some other things? So, as far as the appreciation of a house, right? The appreciation for houses during this current time, again, people were putting in bids of, 10, 15, 20, upwards of 30% over a purchase price, which was way above what the comps were, right? And so what we're going to see now is not people lose value in their homes, but we're definitely going to see it more balanced out, right? So instead of people coming in, a bajillion dollars over asking, and pushing home values to go up, it will definitely do. People won't lose money, but it's projected to just balance out a bit where people are not going to be having their house value so high, right? The market's going to balance out a bit. So still a buy. Oh, I'm sorry, no, still a seller's market. Still going to be decent interest rates, just going to be higher than maybe last year this time, and it's still going to be some competition. That's the better word. Still going to be some competition, but again, it's not going to be um as bad as it was in the heights of everything in 2021. I hope that helps. Hope that helps. The point here is, if you're a seller, you can still get a good top dollar for your house. If you're a buyer, interest rates are still low, so it's still a fantastic time to buy. All right. As far as locally, Philadelphia area is still booming. What makes Philadelphia great is that we are snuggled between two other major cities, which of course is New York City as well as Washington, D.C. So a lot of people find that, hey, it's lower prices here. I think Philly was put on a list of, great places to visit, and another list of, a up and coming place to live, all that good stuff. All that to say is, as people are making the commute easier, as well as people staying home, and there are more remote jobs due to what happened with the pandemic, the companies realizing, hey, maybe it's just better to make these positions remote. It is causing people to look at Philly and say, I can afford a lot more house in Philadelphia as opposed to DC or New York. So, and being as though my job is remote, why not go there? Okay. So, people who have been saving to get a New York property or to get a DC property are coming with a lot more money as far as cash, whether they're paying all cash or whether they are or just don't need seller's assist, or are able to pay cash before their closing costs, as well as maybe add some cash to whatever they're paying a mortgage. It is happening more and more often. Okay, so we're not just competing buyers against local Philly people who are just trying to change the area, but you're competing against people who are trying to relocate, find somewhere decent, not too far from their home base, but they don't have to commute there all the time, every day of the week, right? So Philly is the next best place to be because we out here. Our housing is still low. Our cost of living is still low compared to the other major metropolitan areas. I hope that helps. Thank you for joining me for this week's and today's Tuesday Tip of Two. And I hope to see you guys next week for another installment, another episode. Listen, if you want to buy, if you want to sell, you need to go to book.djmrealtyco.com. Again, book.djmrealtyco.com so you can schedule your buyer or seller consultation. Remember, there's no place like home, no place like home buying, no place like home selling. And as always, I will see you next time. Bye.